All right, all right. Here we are. Sunday, November 10th, 6:30 p.m. Eastern Standard Time. Maybe slightly a minute late. That's okay. All right. Now, yep, we're all set up. All is well. Mark Beavers, I'm across the pond tonight in Iceland. I stayed up late for the live stream. Oh, no. All right, well, priority number one, do not disappoint Mark. Okay. I got it. Mental note, Mark. Throw me a chart. Let's make sure we get any of Mark's requests. Bang, bang, zip, zip, zoom, zoom, right out of the way. You know what I mean? Joe Lopez, hello everyone, and CX, hello, Yuppie, hello, Jared Gamache, we're going to call you Jay, howdy, Daniel, hello, Mark, I'm joking, you guys help pay for this trip. That's fantastic, that's great. You know, Mark brings up a good point, man. That's like, you know, you want to use, like, you obviously you want to book profits, right? But you do want to use, you want to realize those gains and turn them into, you know, whatever, whether it's a physical object or a bill that gets paid or a vacation that you take, whatever it is, to then, like, congratulate yourself. You know what I mean? Like, we practice, like, small victories. So, you know, whatever your end goal is, you put, like, realistic, sizable, smaller goals in front of that so that you can reward yourself for, you know, doing a good job and taking a good trade and meeting or exceeding expectations on, like, a monthly basis. Like, it's really important to do that because you can get real, I don't know what the right word is, but you get, like, real tired of doing the same thing over and over again if you don't take advantage of what you're doing. So even if your end goal is a sizable capital, right? You want to be able to have a capital trading pool of whatever, 100,000, 250,000, 500,000, whatever it is, take a little bit here and there on the road to that so that you could celebrate those smaller victories. It's important for mentality. Plus it, like, you know, it boosts your confidence that, you know, it's okay. I could spend this here. This was a gain. I could spend it because I'm going to make more. You know what I mean? So that's good. And yeah, before anybody asks, I'm eating a bowl of rice. So I don't want to talk about it. All right. Joe says, Iceland is nice and your winters are rough. I would imagine, yes. Michael McBride, hello. You guys are awesome. Thanks, Mark. Jared. The first one, so Jared Gamache. Thomas Emery, what is going on? Me? What? Everything's cool. Thank you, Thomas. Appreciate it. Edmund Barry, sub SP family. Peak! Yo, where has Peak been? Peak, good to have you back, brother. Great advice. You got chicken in that bowl? I don't. I got cheese and some margarine. Yeah, it's not, it's better than the other night, but, you know, it is what it is. Anyway, this is EOS up on the screen because I was doing some charts for the Discord. I had 400,000 other things happening, so I didn't finish, but I will eventually, maybe later tonight. We'll see what happens. Anyway, let's get back to the corn over here on the cob. Okay, BTC, USD, bang, bang, boom, boom. Here we go. All right, so what happened today? We got a late rally a few hours ago. Nothing like crazy, but from the sideways action earlier today and yesterday, it seemed like, whoa. Really, it wasn't all that much. I think it was about a $400 move, and then it died off fairly quickly. It doesn't look like it went $400, but let me double check here. I thought when I was watching it, it went about 400. Well, 391. Whatever. Close enough. Anyway, but look at where it found resistance. All right. If you look close, you'll notice it's not exact. All right, but it is very much finding resistance from the 100 EMA as well as our newly established trend over here, right, which is more or less like a local swing fail from the failed rally right here. But, you know, it's also acting just as heavy resistance, overhead resistance. Anything really under that line we'll consider as short, you know, for now until a break and close above. And that would be regardless of where it sits in relation to other MAs. All right. Scalp life. Very good, Peak. Very good. Peak, I haven't seen you since I converted my portfolio to EOS months back. Maybe after a big trade, upgrade the rice. Thanks. Maybe several months. Yeah. Oh my, I'll be going to the store maybe tomorrow. All right, so all that said for Bitcoin, right? The weekly, yes, we are closing down the weekly. We'll take a look at that in 1 minute. I wanted to show you, of course, wrong chart. I wanted to show you this, right? Volume. So the volume yesterday was abysmal. But we know this, right? We're very much in tune with weekend trading lately and how poor it actually is. And we could see it now that I added the Monday lines on here, right? So every vertical is representative of a Monday of that week with the corresponding date down below. So you simply backtrack 2 candles and you'll see the weekend. So whatever, we'll start at the very beginning over here, right? So Monday volume good, Sunday, Saturday garbage. Okay, Monday volume good, and Saturday, Sunday garbage. Monday volume good, Sunday volume crazy good, Saturday volume pure garbage. Monday volume, right, is pretty good, just about average. Sunday volume not good, Saturday volume crushed it, right? Okay, now look at this week. Okay, Monday volume, right, going this way, Monday volume good, backtracking to Saturday, Sunday really bad, considering, all things considered, right? Monday volume up here high, Sunday, Saturday not good. Monday volume good, Sunday decent, Saturday and Friday were terrible. Monday volume high but not good, Sunday volume absolutely terrible, Saturday volume not bad. Over here, Monday volume is, you know, weak, very weak. Sunday's even weaker. Saturday was decent. Over here, Monday volume good, right? Sunday, Saturday not good, but pretty much equal to the prior week, right? Monday through Friday. Monday volume terrible. Sunday volume was better than Monday. Saturday was better than Sunday. All 3 of them were bad, under average. And it goes on and on and on and on and on. So we're not going to talk about every single week here, but you know, if you see like 2 low volume nodes in a row, you know, chances are that's probably a Saturday, Sunday, and that's exactly what we have over here. Saturday, Sunday were the lowest of the week. Tomorrow, I would expect the same. I know it's going to break trend. Everyone's going to be mad, but tomorrow is actually a holiday in America, right? It's a federal holiday. It's Veterans Day, which means traditional markets will close. So traders that trade multiple markets, right? Traders that trade traditionals and options and CFDs and whatever, they may also take the day off of crypto tomorrow as well. They may only trade Monday through Friday, but they trade multiple markets. With the market being closed, traditional market being closed tomorrow, they may feel so inclined to not trade anything, meaning that they'll take the day off of crypto as well, obviously, even though crypto's open. So there's your little volume rundown. Somebody count how many Monday volume? What do you mean, how many times Monday was the high? Monday's not always the high, but we do see like patterns emerge. I mean, you know, every line is a Monday, so just look, like Monday was the high this week. Monday wasn't the high this week. Monday, Tuesday, Wednesday, Thursday was the high. Monday wasn't the high this week. Wednesday was the high. Monday wasn't the high this week. Wednesday was the high. Monday wasn't the high this week. Tuesday was the high. Monday was the high this week. Monday was not the high this week. Monday, Tuesday, Wednesday, Thursday was the high. Monday was the lowest volume node this whole week. Tuesday was the high. Monday was almost the high this week, but it wasn't Monday, it was Tuesday. Monday was not the high this week. Tuesday, Wednesday was the high. Monday, no. Monday, Tuesday, Wednesday was the high here. Monday, no. Tuesday, Wednesday. So you got almost more Wednesdays than you do Mondays. Wednesday was the high this week. Oh, no, I'm sorry. Wednesday, Thursday, Friday. Saturday was the extreme high for this week. And then let's see, Monday was absolutely the high last week. And then the week that we're currently in right now, Monday, Tuesday, Wednesday, Thursday, Friday was the high for that week. All right. So, you know, obviously we'll print a new Monday node tomorrow. After this candle closes tonight, we'll at least have an idea of what's shaking. Of course, we'll have 23 and a half hours or so by the time we cut the stream to see the rest of that thing play out. Macro. So look at the weekly real quick. And without really doing anything, just look at it. Okay, time's up. All right, so you had a rally up, right? You painted yourself either a symmetrical triangle or a descending triangle, whatever you want to call it, right? You still made lower highs, you still made higher lows, just an ugly symmetrical. Anyway, price broke south, evened out for a little bit. Well, not the same range, but similar. Price shot up, broke, swing fail, came back, retested. You should be launching up. All right, that would make sense on a weekly chart. That's your breakout retest. Dominance. We expect dominance to continue down minimum to the bottom of range, 68.35 ballpark zone. All right. The way this all transpired was this longer trend from way out here back to April, started building this channel, and the channel ended up enveloping on itself and became more of a rising wedge than it did a parallel channel. This was a little bit too low to maintain the parallelness. The low side floor held for 1, 2, that drew the line, anchors 1, anchors 2, and then you'll see the reaction you got when you attempted the third touch. So third touch, this is confirmation. This is what confirms the actual trend itself. Now the trend is legit. And when you did, you got this massive push, right? The biggest push since, the biggest 2-day push, I think since back here in June. I would imagine those two are higher. But outside of that, I think these were the two biggest we've had in a row. Big 48-hour push. All right, from there, though, we broke through range, broke through support, broke into our previous range, and died off, right? We came back. We had a nice pullback. We got the retest on support, and then right here, we call that a weak bounce, right? Or a failed rally. You can call it whatever you want. But that's what happened, right? The bounce should have been good. Should have been. If the support was solid enough and there was enough interest to get dominance back up, we would have had a higher high. Instead, we didn't. We had a weak bounce, and the weak bounce confirmed right here when we broke back into support. Then we had something very interesting happen. We broke through the trend, and we got the retest to the high side, and then a confirmation push downward. So now we're set, right? We got all of the possible check marks have been ticked, and this is an SR flip. So we're looking at a support resistance flip. What was once support is now resistance, and now further downside is expected. So 68.34 minimum downside is what we're looking at here. That's bottom of range. And then we need to see how range is going to react, right? Is the bottom of range going to act as support, or will the bottom of range fail? If the bottom of range fails, then the next major target area is all the way down here. And some would say that 66 is sort of the hot spot, right? We hit 66 on dominance, then alts can really take off. We'll have to see. Clearly we came back to 66 here, but when we weren't here very long. This is a daily chart, so 1, 2, 3, 4, 5 days, and we were like immediately out of 66. Not very long. All right. What people are looking for is some. Hey, where's my chart? Hello, candles. Wake up, candles. Okay. Well, while TradingView is trying to figure it all out, there was trading all the way up here. All right, and the ultimate landslide is what came down and brought it down here, and that's what people are looking for to really solidify an actual season. That's where you can have, compound gain, compound interest, trade after trade after trade, without too much fear of those setups getting completely destroyed by Bitcoin. Generally speaking, that should bring Bitcoin's price down. So there are conflicting stories, right? Like a weekly Bitcoin is saying go long. Dominance is kind of saying go short. And of course, we have the daily to contend with, which is this. Okay, death cross on the daily. So you have a lot of investors looking at that right here, 200 over to 50, right? Pushing price downward. Sideways action after a major rally, right? This would be considered a major rally, even though it's within a larger consolidation pattern. The thing is, it broke major levels, right? So at that time, you broke one level. This would probably be a minor level. This would more or less be a major level. And then this level right here at the time was a major level. You broke it. You did not close above it. Your confirmation candle did, but your confirmation candle ended up being a false break. False break gave you the sideways range that we had for 13 or so days before breaking this range and coming down to our previous support level right here. And that's where we find ourselves. All right, so conflicting stories with Bitcoin, painting one picture of, retest, swing fail break, retest, positive gain, expected on a weekly chart, a higher time frame, but nothing else to couple with that. And then smaller time frames, and you have, areas of interest that are telling you, short would be the way to go. So couple all that with dominance, and dominance looking like it wants to go lower, but it does have one sort of, major area of support that it should deal with first before any of that crazy stuff happens. So got things to deal with. As far as CME is concerned, right? This is your CME chart right here. Futures opened up earlier today, not too long ago, but when we look at these, we look at the close of the previous candle and then the open, right, of the next candle. So currently we would be showing this gap down here. So it would be a down gap, nothing super crazy, but that would be something to, consider or keep in mind, that this would probably, I believe the math worked out to be 98% chance that this is going to come down to 88, 85 in order to satisfy this little internal gap. Now, I spent a lot of time on gaps, and there's different kinds of gaps. There's different ways to calculate them. Some people consider a gap like there has to be like an actual space, like absolute space, where they wouldn't consider that a gap because the prior day trading fulfilled it. So the way I'm looking at gaps, or the way this chart approaches gaps, I should put it that way. The way this chart approaches gaps is the prior day's close to the new day candle open. All right, that's the only major criteria. So even though there was action here, I don't care. That doesn't mean anything. The gap was created, right, because the high was higher, right, or the open was higher than the previous candle close. Very, very, very simple, really going back to like brass tacks. I mean, like straight up, close to open. It's as easy as it possibly gets, but it makes it difficult to find the gaps, right, because they're not obvious. So you can't just rip through the chart and be like, well, here's a gap. All right, let's see if it got filled. That's just not the way it works. You actually go one candle at a time. You look at the close, you look at the open, you draw the box, and then you see if it got filled. And, I went back and I did all 488 candles. This would be 489. And we're good, right? That's what we're looking at. These are all legitimate gaps. All right, not many of them. There's including today, that would make 12. 12 out of 400 and 80 should be 89 now. Yeah, with this candle. So 489. And the math worked out to be like, that was like 2%, 11 on 488. So which means 98% get filled. Or have gotten filled. These could very well still get filled. This gap was a larger gap, and that's another thing, right? This was a larger gap. We filled half of it. We didn't fill the whole thing. And there's different ways to constitute a fill, right? A fill could be all you necessarily need is just a wick to come down, in which case this whole thing was a gap. But all of that got filled, right? Pretty sweet, because of the wick. Others will treat a gap fill only a solid bar candle or solid bar candles can fill that area. This chart does not represent that. This chart considers a fill on wicks, right? So if price does come down in that area, it's legitimate trading, then it's good, right? And it gets filled. So anyway, things to consider short term, and I'll go back and get the actual number, but the ones that fill like the very next day, it's probably 90% of the time. I mean, they almost always fill on the very next candle, or if not within the next two. All right, so something to keep in mind, dominance could certainly bring us back down to 88 and change, which really from where we're at right now in 96 is really no big deal. It just puts us back to really where we were earlier at the open. So it's not like a monster gap down to 7K where people are going to start freaking out. It's not the case. All right, let's see. What do you think dominance will be like for BTC leading into the halving? It's hard to tell. We could go back and look at previous halving dates and try to drum up some, not like a fractal, but try to drum up like some historical information on that. But, the halving is an interesting time. Yeah, maybe we'll do like a thing on the halving, kind of talk about it in like more detail. Yeah, so I don't really have too much of a comment on it right now. I would need to see previous historical data and make a far more educated guess. All right. So now let's look at the hourly real quick because we did have a move on the hourly. Okay, so when we look at our hourly chart and we don't move anything, right? We do have a little break over here. Oh, crazy, right? So little mini break, right? First one was a false, came down, and then we had some action. And then we broke above again, came back down, but this time we found support. So when we look at it on the daily, you say like, well, how is that even possible, right? Thing is, once you move, like, look at the scale in which I could place candles. So I'll put a vertical line over here. Okay. So I can only, that would represent a candle. The very next candle is right here. There's nothing in between. There cannot be anything in between. There is no in between from November 13th to the November 14th. That is it. That's the closest we get. So when you have a line that is representative of one time frame, right? This line was added here, right, on the daily chart. When you zoom in on something with much higher resolution, if you don't like customize it or what do you call it? Like change this to the time frame that you're on, you could see false results. So in other words, if I was going to use this trend on this chart, that's not where I would place my second anchor. But that's where the anchor wants to be placed because that's where it sits on the daily. You understand what I'm saying? So look at where the cursor is. Look at what the date says. 11/3/19 at 1900. What's 1900? 1900 is 7 o'clock. 7 o'clock what in Eastern time? 7 p.m. What's 7 p.m.? That's the daily candle close. Okay? So on the daily, that's where it's going to sit. Whoa. Yeah. On the daily, that's where it's going to sit. 11/3/19, 1900. Because that's how the system thinks it's supposed to be. But trend, obviously, trend line, swing fails, all that stuff transcends just the daily, right? You can look at it on the 4 hour, you can look at it on the hour, you can look at it on the 15-minute. The only thing that will stay is horizontal support resistance, horizontal boxes, that stuff. Obviously, because you're not relegated by time expanse moving into the future, where this would be like a leading indicator because you're getting like future results over here. Not the case. So just remember that when you go into the hourly and you're making trade decisions, don't just look at this and say, oh yeah, we're super good to go, I'll buy that. No. Now you have to readjust it. You have to readjust it to the time frame that you're on. So you'll see, like, once in a blue moon, I'll come on to one of these and I'll change it, right? I'll move this and I'll move this, and then it'll look like a whole new line. I don't do that often because I generally stick, even though I look at every time frame, I generally stick, especially with swing fails and trends and anything of major relevance. That'll usually be on the daily. That'll start from the daily. It'll stay on the daily. So if I change it on the hourly, then every time I go back to the daily, I have to rechange it back to the daily, and that just doesn't make any sense for me. I'm not making trading decisions based off the hourly chart, so I'm not adjusting it to the hourly chart. Just remember that if you do that, right? Make sure you do update your charts. All right, let's see. Mr. Remodel, can you take a look-see at ERD/BTC? If we hit those targets, that would be nice. Yeah, no problem. Let's take care of the candle close because we just did that, and then that'll be the first chart we pull up. All right, so we did just close the daily candle out, so it also means that we closed the weekly candle out. Let's talk about the daily first. opened up at 88.06. We hit a high of 91.42, a low down to 87.50, and closed it out at 90.24. So it was a gain of $212 or 2.4%. Before we go crazy, let's take a look at what the weekly gave us to look at. All right, gigantic spinning top, good buyback. Overall, looking pretty good if you're not super duper tied to, these levels, right? So if you're allowing a front run here, right, which is acceptable, then this is a pretty solid retest. This would say a break and close above level, right, with comeback, retest, and looking for further highs. From here, right, you're on the weekly chart. So this weekly chart is dedicated anchor on, right? So this is ready to rock. Just so happens that the weekly and the daily have that same anchor point. So it worked out pretty well. All right, so anyway, all things considered, this is a break, weekly push down, ends up getting the retest, and then looking for further upside. Obstacles in the way, just a local trend is what it would look like on a weekly chart, with the 382 hovering around the 20 weekly moving average. So kind of a big deal here. That's a major thing for long-term traders and long-term investors. When they're looking at weekly charts, they do want to make sure that they are up and over a fast EMA. This is not all traders, but for most, a fast EMA, in this case it would be the 9, right? So 9 EMA, and then a slower but still slightly fast MA. In this case it would be the 20, right? So the 20 is the moving average, the 9 is the exponential moving average, and to be above both of those is sort of a green light for investors to get in. So right here is a no trade zone for a lot of traders. They want to make sure that they get over that 20. They can see it in their lights, right? They see it coming up, but there is obviously a potential chance that we do come back to the 100 and even all the way down to the 50. But look at the difference here. So the 50 last week was sitting right about here, which would have been great confluence with the bottom of our falling wedge. Now, falling wedge on the weekly chart doesn't look like it's all that much to look at. On the daily chart, it's certainly a valid pattern that looks pretty good. South side would have put perfect confluence last week with the 50 MA, the 100 EMA, and the bottom side floor of the falling wedge. Now, we've lost that now, right? That opportunity is gone. So just know that the 50 is moving upward. It isn't an upward move, which is bullish. No, I mean, not like that's not a signal, okay? That's not a bullish signal. It's just a healthy way to look at moving averages, right? It is sloping upwards. Where your 100 is sloping downwards, so that's not a good sign. Your 20 is also sloping downwards, also not a good sign. And your fast EMA, the 9, is relatively sideways. So it's not giving any indication at all up or down. So that is very much a indication of no trade zone. This is an area that you just don't trade. You need confirmation, or you need some type of lead one way or the other in order to actually do anything with that. And have a sound trade, right? Or have a good quality setup without, and being able to sleep at night while you're in it. All right, we didn't talk about the numbers, so let's do that. All right, the actual numbers are, we opened up at 92.07. We hit a high at 95.86, a low down to 86.61. We closed it out at 90.24. So we ended up losing $182 on the week, or 1.98%. So overall, weekly consideration, it's not bad. It's really not all that bad. It is the second bearish candle in a row. It's also the second spinning top in a row. Spinning tops are bias neutral, meaning that they're not bullish and they're not bearish. It just sort of describes indecision in the market. You had a tester to the high, a tester to the low, but nobody really won. Yeah, that's coffee. I'm gonna need some of my across the pond buddies to send me some real coffee, because I think we all know coffee in America's crap, but we make the best of it. We make the best of it. All right, but it's awful. Anyway, so far we got a little bit of buying over here, but all things considered, I want you to look at two things here. All right, so focus one on the upside level break, okay? And it doesn't, like, even if you paint this, so if you paint it as a trend, right, you're probably gonna put this like, let's see, well, I mean, you're not gonna use the high because it's so irrelevant. You might use that low down here, this guy right here, which would then put you somewhere in like that ballpark. So not much higher than the swing fail line I have on there. And, in any event, right, still higher than current location. So look at that real quick, right? So bang, bang, process it. Okay, very good. Break and close above, come back, retest. All right, that's great. Now look at two other things, right? One, look at this green box. And two, look at this red box. All right, so the red, and let me get rid of these just to not confuse you any further. Okay, clean it up a little bit. All right, so a couple different ways you can interpret the weekly chart. Clearly, we're in a downtrend, obviously, right? We are making lower highs, right? So you have a lower high, lower high, lower high, lower high, lower high, right? Right, okay. On the downside, we are making lower lows, correct? Lower low, lower low, lower low. All right, so we are in a local downtrend. So super easy. Anything we do bullish at this point would be a counter trend trade, correct? Correct. So if we are going to do counter trend trades, like if we are going to talk about longs, we need to really not only have an idea for that long does need some backup, right? It needs a little extra support. It needs a little extra confluence, because now you're bucking the system, right? If the system is going down, you're like, yeah, but I'm going long. That's great. Don't go long on one reason, go long on 2, 3, 4, 5 reasons. Really make sure you stack up the confluence with those longs, because you are counter trend. Now that's if you're trading this local action. If instead you're a very, very much a long-term trader, look at the view like this, where you can say, okay, well, I do have a high, I do have a low, I do have a lower high. Okay, I am still trying to make a lower low, which means your lower low should be below 31 and change, 31.22. All right, if that's your mindset, right, then you'd be looking at shorts down to 3K or lower. Now, if that's too unreasonable and this history is just too long ago, take the next major move. So the next major move is this guy, 3 to 14. So now your view changes once again, right? Your macro view becomes something like this, where, okay, we had a low, we had a high, this is a higher low, meaning this is a pullback. So I'm looking for a higher high. All right, so a lot of it becomes interpretation and where you are as a trader and what type of time frames you're trading for you to get the overall idea of what we're looking at. You could zoom all the way out like this and say, uptrend, right? What would it take for this to be considered, an invalid uptrend, right? At that point, like, you really got to trade. You have to break your major level. So if this is your low, and this is a high, and this is your higher low, and this is your higher high, well, then you'd have to sort of invalidate your higher low over here. So, like, when we're under $214, is that when we're going to say we broke our uptrend? Okay, so just think about views, for a minute. Think about macro views. Think about zooming out. Think about throwing on a quarterly chart, a monthly chart, a weekly chart, and just putting yourself into the bigger picture. We can get very lost on a 15-minute chart. It's eye-opening to be able to backtrack a little bit and just open up a weekly and just say, hey, we got this level down here. It looks like it was holding as support. Does it look like price wants to come back and check it? I don't know, but if it does, I'll put it on my chart and be like, it's an area of interest. We might have a little hesitation here. Maybe there's a moving average, maybe not on the weekly. Maybe we got something that lines up fairly well on the daily with that same zone. I don't know. All right, just something to consider. Throw that out there so everybody is kind of on the same page. Alrighty, let's see. Yes, we will do ERD. I got a ERD buy order at 22. So what's up with Elrond? Are we gonna moon with it? True story. I got some nice. You got good coffee in Oregon? I don't know, man. It's so hard to find good coffee just in America alone. Period. Anyway, ERD. Let's take a look. All right. So what do we got as far as this has none of our information on it. Ugh. All right, no problem. We'll set it up like real quick. 20 to 22 was the buy range. So let's see, 20 is all the way down here. 22 is all the way up here. Right. Okay. So we'll just bring that back a little bit. I know this trade's a couple days old, so we'll do that, and we'll just extend that out a little bit. Okay. All right, so that is the entry zone. Let me throw a stop on here real quick. Let's see, what's our stop at? All right, what is the stop? 18. Okay, so we got plenty of room from current price action to stop. We are out of the buy zone. Let's go ahead and put our first profit target on here, which is what? I don't know, 32. 32, that's good. And let's do this. We're gonna make that blue for TP1. Right, okay, there we go. All right, so here's the trade. Here's what we're looking at. This is your buy zone, stop loss, take profit 1. Overall, let's see, downstairs support levels ranging, oh man, super lows, Toshis. Okay, that would be like overall down support, so we would be stopped out before hitting this lower level. If the lower level doesn't hold, that would be the reason, right? You'd have massive break, and once you broke, that'd be bad news bears. All right, upstairs, let's see, the level up here. So the major level of resistance, which is now support, would have been right here. So this level right here was resistance. This is all resistance, right? So that's why we're using that level, and that would be right there. So that level has been beat. So obviously it's green now. It would have been red if we were trading down here within this little range. What we did from the range area, right? Low, high, low, missed it. Super low, push back, high. That's your tester candle. Came back, reset the formation, and then broke it. Once we broke, we came back. We didn't come to the top of our buy window, I guess I want to call it. We came to that level right here. That was the retest level right here. So that's perfect. Came back up. So it just shows strength in trend. And now, a flip of resistance and support. So what was once resistance is now support. So now we can take a look at that a little bit further. I would like to see this level here. Let's see something real quick. So 1.6 hit, 2.6 is sitting at 33. So TP1 is like front running a 2.618 target level by one set. So this is pretty good. Now this would be your next major level here, where it's not as clear, right? Because your downstairs level would be like this zone, and your upper level would be that zone. So that whole area, like these super low sat coins, unfortunately, for TA, they're not TA friendly. This whole area, right, spreads 3 Satoshis. Unfortunately, 3 Satoshis on a coin that is ridiculously low sat is 6%, right? So it is what it is, right? You have to deal with it. This is support. This is resistance. That is target 1 zone, right? So TP1 is sitting at 32. Does it look like we'll make it? Yeah, I don't see why not. This is a low. That's your high. That's your higher low. That's your higher high. So a little bit of pullback over here. Found support back. So you flipped out your original zone, which is good. Strength is here, right? You have the 100, the 20, and the 50. This chart does not have enough history to actually show you a 200 daily. So you go with what you got, right? You got the 100 EMA, you got the 100 MA, you got a 21 EMA, you got a 20 MA, you got a 50 MA, and you got a 9. And you're currently trading above all of them. So yeah, ERD looks good. I have no issues with that. All right? Cool. All right, let's see. BNB USD. Okay. All right, BNB is still inside our broadening wedge. It looked like it hesitated for a little bit on this level. So we did flip it green, right? Right here, it broke south. It got retested short. This would have flipped red, but then we flipped it back to green because we broke and closed above it here. So this whole U right here is kind of a false break. So continual trend remains, and that means starting back from this candle over here, and here we are right here. So what was the close over here ends up being the open over here, and this all is just, just pretend it never happened. That's the case, then we're just sitting on top of that same level of support, right? We still have the same level of resistance. Nothing has changed with BNB. Until it breaks out of this zone, there's not a lot to look at. We do want to break through this longer trend level here. And if we break through that, that's confidence to go long. You don't want to long into resistance. So you would like that to happen and this to happen at least at the same time or close to it. And this way you can at least feel better about coming up to the next target zone, which is somewhere around 22.8. But overall, all things considered, I mean, the trend is still the trend. There's no reason to think that this is no longer a trend. You're holding good. You got a low, you got a high, a higher low, higher high, higher low. Next step would be a higher high. If it fails, right, then follow the trend down, right? So basically, like the failure here, follow the resistance down, right? And you would just look for key levels of support once again. This would be your next level, and then the actual broadening wedge would be your third level of support on the way down, if it is to go down. But right now it looks good. If you were new to TA, what would you start off learning if you had to do it all over again? Structure, like support resistance would probably be the one thing if I had to start all over again. So if I pulled up I don't know, something that I definitely don't have a chart of. Storm, maybe? Of course, I have a chart for Storm. And now I need something with more history. Let's see. Maybe like BSV? Finex, yeah, definitely don't have a chart for that. All right, so if I was like just starting, I'd do it all over again. Oh, I should have done BCH. Coinbase, whatever. Oh, damn it. That looks all irrelevant. Whatever, let's get rid of it. First thing I would probably learn would be horizontal support resistance. And then from there, I would add in trend resistance, like angled slope resistance. But this would literally be how my chart would look. No indicators, no confusion, just straight up price action. And from here, you would just take a horizontal and you would start painting, right? This is your canvas, so just start painting the obvious. So right here, it's an obvious level of support that turned into resistance. That's fine, right? No need to overdo it. This is probably the most important level on the entire chart. That's really it. Then I would come over here and say, all right, well, now that that's done, let me see what we got going on over here. It's my next most important level on the chart. Okay? That level's been broken already, significantly, so moving on to the next one. All of a sudden, we're at resistance. Take this over here. First, I would start here because this seems to make the most sense. And what I'm looking for is, did we flip it proper? Right? So did we break it and come back and retest it? Right? Or is this no longer significant or relevant, in which case I would do something like that. Okay? In this case, I would leave it like this. And that would be it. Once I have this information, it becomes less confusing. Why is that? Because we're at an apex of a, super busted up and ugly symmetrical. So I won't even talk about the symmetrical because the pattern, at that point, I wouldn't know what a symmetrical is. I would just simply know that this is resistance and this is support. And when we break resistance, our next level of resistance is up here at 644, 641. So I would buy this. Once we broke it, I would buy it at whatever, 295, and I would look to sell it at 644. Super easy, right? Then I could zoom in on the hourly and see like, wow, is there anything that I kind of like missed? Was there some really important like levels in here that, maybe I want to jot down during this open space? See like maybe areas where I want to take profit. So once you have like the bigger picture, everything else is just like fine tuning. Like, well, maybe I got something in between 641 that might be an area where a lot of people are taking profits. Maybe I also want to think about taking profits. And one of those levels would be right here. This is an area where now I would change this to know that that's not a weekly level, but this was resistance, right? Price came up, sort of did its thing, came back down, sat there for a minute, and then it came up and it was resistance again, and it was resistance again, and then it painted like this lower area. So I would just say like, well, this was an area where price struggled to get over. For whatever reason, I don't know. I'm not coupling it with any other indicator. I'm not looking at volume. I'm not looking at anything. I'm just saying, price had an issue here. That's all. And because of that, maybe it'll have an issue again the next time it gets there. So the next time I see price approaching $354, I'm probably going to sell a little bit and allow it to, come back and show me that it's strong enough to break through it. And then at which point, I might be taking another level. Now, I could always take the high level here. Or I can, look back in history and be like, well, maybe this level seems pretty good. So maybe I would do something like this. Because to me, I would say, it's not a perfect level, but this showed support, right? Support kind of came down, sat on it for a little bit, tested it, pushed back up, came back down, sat on it for a little bit again, lost it, got it right back, came back down again, did this other wacky little noodle thing right here. And then this should have been the BCH, BCSV fork, I'd imagine. So that's why there's a gap in the chart on Coinbase, because nobody could understand what they needed to do. Whatever. No big deal. But anyway, price comes back over here. And it's not a perfect level. It's not like the high side major resistance zone. But it did hold price back for a few days here. And then when we got up, it ended up being a false break. Price came back down. Came back to it again. Held it back again. Broke through it. Ended up being another false break. Price held back down again. So to me, I don't know. I mean, I don't know anything about TA. I'm just saying price had some issues there. So I would be looking at this trade like this, and I would just do this. I would say, oh, let me just grab something that I can kind of like dance around with. Say, all right, well, that's sort of what I'm looking at. I want to see a break and close above that level. And then once I got that, I'm going to come over here and be like, all right, well, I don't know when or if or it'll ever do it, but I would like to take profits here. And then I would like to take profits here. And then I would like to take profits here. And that's my entire trade. That's how I would approach it. That would be the first thing I would learn if I knew absolutely nothing about TA and had to start all over. Horizontal support resistance coupled by upward and downward sloping trend resistance, just support resistance in general. Once you have support resistance in general, that adds in Fibonacci, which is what? Support resistance levels. All right, support, 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 resistance, resistance, right? Moving averages, which are what? Dynamic support resistance. This is just another way to look at support resistance, right? That's all that is. Currently, the 100 is support, right? Currently, the 200 EMA is resistance. The 200 MA is target, okay? That would be how I would approach it. All right, RCN BTC. All right. Oof, I haven't looked at this in a minute. Shh. It's okay. It's okay, Mike. I know you want to bounce around, make a bunch of noise. All right, let's get rid of this. This was good. Let's see if it's relevant anymore. Not really. Nah, I mean, sometimes you get these internal, levels. Seem to make sense. Let's get rid of that for now. Let's move this guy over. Here. Here. Sort of high side action. This guy come over. Get rid of this. little conflicting. All right, so the bigger picture, you got a break. You got a break and close above major resistance, long-term resistance, a 3-week pullback for a retest, 2-week confirmation break. You need to break that level. You broke it, but you did not close above it. All right, and why that level? Because that's the level that breached on the first attempt. That's your breach zone. All right, so it's something that I use to confirm your next rally, right? To confirm the next actual break. So it's something that I use. I like it. It does seem to work pretty well as far as confirmation. It will get you in the trade late, but all things considered, this would have been a trade that, you know, you would have thought about getting in on this pullback right here if you were looking at the bigger picture. So if you're looking at the weekly chart, or even if you were looking at the daily chart and you allowed yourself all that time to buy it, right? Now on the daily chart, it looks a lot different, but it's still the same thing. You know what I mean? There's nothing different here as far as you got a break, false break, come back. Here's your actual break, right? And then price just kind of did nothing, rallied up, and it gave it all back. The thing is, if you have this long-term trend on here, it makes sense why it came back. Right? You never really tested it the first time, so that's your test right here. So break, test, buy, right? So you would have bought down here in this relative zone, somewhere around 377 would have been your buy area. All right, from here, you could do a few things for targets. So again, you'd be like looking at high side, low side, on the move. And like minimum target, you're looking first off would be 168. You know, the 1618. And it's good to know that there's confluence, right? Like, I mean, you know, I don't want to say like that wick, but pretty significant. It's like literally on the same sat, if not like 1 or 2 off. 809, and what are we looking at? 810, so 1 Satoshi away. But it's good, right? This is a nice little, you know, little resistance area off of a bounce. So major downtrend coming down. One really good bounce. That bounce is resistance, I don't know, 7 days in a row before making another major low. First attempt up, didn't even come close. Second attempt up, got rejected by it. Came back, price did its own thing, pushed back up again, closed right above it, and then false break right below it, right? So that's a good level. That's a good target zone. I would be targeting 1618 for sure. For me, I would be a little bit more strict about this because of this initial candle. So for me, I would want to see, and especially now that this is a false break, right? That broke this level and couldn't stay. So now I'd be looking like we have to get over this level. We have to break this level. And then I'd be looking to get in. So I might only get in at like 643, but 643 to 810, probably still a really good trade. Yeah, 25%. I mean, that's awesome. I have no interest in catching the knife, right? Or, you know, selling the top. That's like, you go through that phase as a trader, trying to like find bottoms and find tops, and you realize like there's no point, right? You can make all your money in the middle. You make all your money in the middle. You don't need to buy here and sell here. That's ridiculous, right? You could buy here, and you could sell here. Take it from the 100 to the 200, right? And I mean, at the end of the day, if you're unhappy with a 77% gain, no one can help you. You're unhelpable. You have become unhelpable. At which point there really is. There's no one that can help you. You know, you're just too greedy. That's what it would come down to. We can move this up now because we do have this higher action. Because I want to see what the actual pullback ends up being. So 643. I think I could do it. Yeah, look at that. So look at that. That's even better. With the high side pullback, right? So this is the low that came after printing the high, and it taps down like right on the 5. That's perfect. So it's a 50% drawdown after the initial move. So you had one big move here, and then you had a nice drawdown, and then you consolidated, right? But then you had a second rally, and then a 50% drawdown from here, and no consolidation, right? This is a bounce up. So looking for continuation up. You know, you got some struggle areas over here, but for the most part, it doesn't look bad. Doesn't look bad at all. All right, let's do one last check on our old friend, and then we will wrap it up. Doesn't look like much happened. Up $18 from post, so no big deal. All right, looking ahead for the week, like major targets for the week based off of different circumstances, right? So if we have a highly volatile week, upside targets with, of course, obstacles in the way, right? Your major obstacle being the 200 MA, then resistance zone, and then the 100 MA. After that, you know, weekly, I'd be looking at 11,363, coming up to that 618. That's high side. That's if things are volatile and bullish. If instead things, you know, kind of remain or stay or become very bearish, then the low side target is still down here. Now, this would be the daily chart, so it would be perfect today lining up with the 350, but I don't expect this to come all the way down today. That would be, not that we can't do it, trust me. We have, you know, $1,000 candles, $2,000 candles. That's not a big deal. I wouldn't expect it to happen today. There's nothing to create that sort of bearish momentum, and we're not really at a trigger point for that. Typically something that's going to get you that is like stacked orders, you know, where you just have like so many stacked longs that all put their stop losses at the same place, or so many stacked shorts that all put their stop losses at the same. So, you know, and then it's like a cascade effect, right? Like one batch enables the second batch, which enables the third batch, which engages like the fourth batch, and yada, yada, yada. So downside target, again, with obstacles in the way, first stop coming down for the swing fail. If the swing fail holds, I do expect bullish reaction. I really do, right? Just looking at the pattern itself, the pattern is a multi-month, well, the pattern, right, the falling wedge is its own monster, but the development of the swing fail has lasted so long, you know, from this candle, right? That's your anchor point on July 9th. Really held its weight here. That's your first break and close. Confirmation candle was shit. You lost 24.72. Second attempt, you had a break and close above. Confirmation candle was shit. You lost 24.74. Almost the exact same amount in almost the exact same amount of time, right? 6 days and 6 days. So both things to consider. Now this is like essentially your one, we'll call that two. This is essentially your third attempt. Now this is a clean break. This is a little bit different. We didn't just squeak by. This is a clean break. And then major consolidation, right? Like, 11, 12, 13 something days of consolidation with a failed rally at a level of interest, right? So a failed rally at like a major target. So 100 daily moving average is okay, right? If you had a failed rally and you had no reason for why price reacted the way it did, that would be a lot worse. So this makes a lot of sense, right? We took a lump, took a punch in the face over here at the 100, no big deal. Price comes down, finds the 50, finds support. But I would still very much want a reaction here. And at the end of the day, if this thing flies up, then, we're going to have to say it got front ran. I mean, I hate to do that, but, let's measure it one more time because it's so close. It would be so stupid to not hit it, but whatever. You can't control the market. So what do we got? 1.28%. I mean, it's $109. It is a big deal, right? It's a big deal. If it was like $40, $50, I probably wouldn't care, but $109 is a lot to say got front ran. I don't know. Unless they're all just trading off the weekly chart, because the weekly chart is close enough, right? The weekly chart certainly looks like break and close, retest, push up, make higher highs. Daily, when you zoom in like that, things change. So if we do come down that way, I expect support, I expect reaction, and I do expect a lot of buying. If it's enough, it'll propel price more than likely through this resistance zone and through the 100 in one shot, like literally in one candle. Just smash right through it, probably find a ton of resistance at the 382. But at the end of the day, I think momentum and FOMO would probably end up pushing through the 382 and the 5 and slow down somewhere around the 618. Downside targets, like I started to talk about, first stop is down here in swing failed. The swing failed does break, maybe a little bit of hesitation ballpark in the 77, 78 zone, really only because of this stuff right here. All right, it was a level of support. It was a level of interest. We are clearly out of that trading range. We don't need to go back into it. We have a pattern to go off of, but we could see a slowdown. We could see a lot of buy orders get filled right here, which would slow the downward momentum. I do eventually think we would break through that. I think the double bottom here would be completely ignored. This pullback 618 level is a very, very, very good level, but I do think momentum would just push us to the downside down here, and that would get us somewhere ballpark zone, somewhere near the 350, and that would be the first. That would really be the first, 350 daily touch, since we broke it back over here back in May, right? So not that we ever need to come back and retest the 350, but that is kind of one of the last levels of defense over here. So it does have some good confluence. We got pullback levels. We got the all-time high 236. We got pullback 618. We got the 350 MA, and we got the bottom of the falling wedge, all kind of hovering around that same zone. And if that were to play out, then that's sort of what I'd be looking at for the week. All right? Excellent. So I hope everybody has a great week coming up. Finish out the night well. If you're in America, if you are a veteran, then happy Veterans Day tomorrow. Definitely thank you for your service. That is much appreciated. So remember that tomorrow's volume could be very low. So be prepared for that, and which does mean it could be very violent because it takes a lot less money to push through thin books. All right. So until then, I want to see you guys on the exchanges, and happy trading.